Hi traders, you are welcome back to the Forex Geek channel. If you are struggling with complicated indicators and messy charts, this video is for you. We are diving into a simple price action trading strategy for beginners that will help you trade with clarity and confidence. Okay, price action is one of the most effective ways to read the markets because it focuses on raw price movement instead of lagging indicators. All right, so by the end of this video, you know exactly how to identify key support and resistance levels, read powerful candlestick patterns for early entry confirmation, understand market structure and trend direction, and apply a simple step-by-step strategy to Forex, stocks, and crypto. So if you're serious about learning trading, make sure to smash that like button, subscribe to the channel, and turn on notifications so you never miss a new video. Okay, let's just jump right in. Now, the foundation of any price action trading strategy is support and resistance. All right, support and resistance are very important zones, right? They're very important zones in technical analysis on your chart. Basically, very important zones. These levels act as natural barriers where price reacts, and they help us find the best trade setups. Now for support, support is a price level where buyers step in, preventing the price from falling further. Okay, while resistance is a price level where sellers take control, stopping the price from rising higher. A simple way to find these levels is to look for areas where price has bounced multiple times in the past. All right, areas where price has bounced at least 2 times in the past. When price approaches these zones in the future, right, it's time you'll be aiming to pay attention because those zones are important zones. Okay, so if you identify key support and resistance zones on your chart, when price begins to approach those zones in the future, you will be looking out for possible reversals. Okay, now it doesn't mean that you should just enter a trade immediately when immediately price approaches those zones. We need confirmation, which brings us to the next step: candlestick patterns. Okay, candlestick patterns basically reveal market sentiment, and they can give us strong entry signals. So I'm just going to be talking about the pin bars, engulfing, and doji very quickly. Pin bars have long wicks. All right, a pin bar usually have a long wick, and it occurs around support or resistance zones. Basically, it is called a rejection candle. All right, it's called a rejection candle. I'm just looking for a good example. Okay, see an example here. It has a long wick and a small body, and it shows price rejection. Then the engulfing is a candlestick pattern in which a large candle completely engulfs the previous candle, signaling momentum shift. You can see what happened here. You can see how this sell candle engulfed this bullish candle. So this is what we call a bearish engulfing. We also have a bullish engulfing where the bullish candle engulfs the previous candle. Okay, then now for a doji is the last candlestick pattern we're talking about. It's a candle with a small body. You can see this is an example: a small body and long wicks, okay, on both sides. All right, the wicks are usually longer than the body. It indicates indecision. So let's say price reaches a support level, for example. Okay, let's say price reaches a support level, for example. You can see we have a support zone around here. Let me use this. We actually have a support zone around here, right? So imagine price reaches that and then forms a bullish engulfing pattern, or a pin bar, as in this case. It shows that you will likely have a buy, even if it is temporary, because it means that buyers are stepping in. Now, in as much as this was a sell trend, you will notice that when this bullish candlestick pattern showed up, it resulted in an upward move even though those upward moves were just pullbacks. But those bullish candlestick patterns resulted in temporary pullbacks. Okay, so that shows reversal candlestick patterns. Had it been it was a buy trend that these bullish candlestick patterns showed up after a corrective move, then you will likely have a longer move compared to what we saw here. Or had it been it was bearish candlestick patterns that we saw, then you will know that you likely have longer sell moves, right? Now that we have a setup, let's move on to market structure and trend direction. Well, one of the biggest mistakes beginners make is trading against the trend. To avoid this, we need to understand market structure and trend direction. Okay? Now, for an uptrend, price will be making higher highs and higher lows. That is the characteristic of an uptrend. Higher highs and higher lows. This is the characteristic of an uptrend. So you should be looking for buy opportunities. Then for a downtrend, price will be making lower highs and lower lows. This is the characteristics of a downtrend. So you'll be looking for sell opportunities. Okay. Then in the situation whereby we have price just moving sideways, we call it a consolidation or a ranging market. Okay, or you can call it a sideways market. It's where price moves within a range, trading near support and resistance. So in this case, you can see we had a sideways market around here. To confirm the trend, use a simple trend line, or you can use a 50 period moving average, okay, to confirm your trend. If price is above the moving average, we focus on buy trades. If price is below the moving average, we focus on sell trades. Now let's put everything together into a simple trading strategy. Okay, here's how to apply this simple price action trading strategy for beginners, step by step. Now the first step is to identify key support and resistance levels on your chart. Okay, you can open your chart and begin to plot the levels on your chart. All right, just identify levels where price was rejected at least 2 times and mark those levels on your chart. Then you wait for price action confirmation using candlestick patterns. All right, for example, mark important zones on your chart. See, this was area of rejection at least 2 times. So when you've done that, you watch out for candlestick patterns. You can see how we had this rejection around here. Then you check the trend direction. You can see this coincided with being below the moving average. Then you can enter a trade. In this case, it's going to be a sell trade, and set your stop loss just above the resistance for a sell. If it was a buy trade, you set it below the support. Then for your take profit target, you can use the next key level. For example, for a sell, we can use support levels, right? For a buy, you can use resistance levels. So this simple method removes the guesswork and keeps your trading clean and effective. If you found this video helpful, hit that like button and drop a comment letting me know what part of price action you struggle with the most. And if you're serious about mastering trading, subscribe to the channel and turn on notifications so you never miss a new strategy breakdown. In the meantime, thank you for watching, and I hope to see you in the next video. Happy trading.